Good morning, and welcome to the BioSyent Inc. second quarter 2014 results presentation. My name is Rene Gorham. I'm the Chairman and CEO of BioSyent Inc. I'd like to start today's presentation with a quick run-through of our disclaimer regarding forward-looking statements and the fact that the company does not undertake to update any of our results or statements if results differ from actual results in the future. So I'm going to start off on the next slide with a recap of our sales for the quarter ended June 30th. So our sales in the second quarter of the year reached just under 3.1 million, so $3.072 million for the quarter. Taken with 2011 as a base year, that represented a compound annual growth rate of 68%. In the quarter of 2014 versus 2013, you can see that we grew 72%. So fairly strong growth and certainly accelerated in the second quarter versus the first quarter on a year-ago basis. Our sales for the 6 month ended June 30th were $5.52 million. That represented a 66% increase from the 6 month period of 2013 and produced a 3-year compound annual growth rate, 2012, 13, and 14, of 70% a year compounded. So what's driving those results? Overall, the business is healthy. On the next slide, you can see the key growth drivers in the second quarter were FeraMAX 150 unit sales were up 73% versus the second quarter a year ago. FeraMAX powder units increased 89% in the second quarter versus the first quarter of 2014. I think you all know that this is a launch phase product for us, so we are working off a fairly low base of business, but nevertheless, we're very pleased with 89% sequential quarter growth. And finally, Cathogel units were up 377%. We now consider this a growth stage product. It is working against a fairly modest base in the second quarter of last year, but nevertheless, this is a trend that we've seen on this product now for quite some time. And with 377% growth, we think it's coming into its own in the hospital market. During the quarter itself, we launched RepaGyn vaginal suppositories in the women's health market. If you want more information on that product, please visit repagyn.ca or our BioSyent website. There's lots of information on that product. I'm not going to speak too much about results on that product because it really was, we got going at the end of the quarter on that product. We are preparing for the Q4 launch of a new gastrointestinal product. It was in-licensed on March 4th of 2014. It's already approved by Health Canada, and production is scheduled, and we're expecting to be shipping in the fourth quarter of this year. And finally, in the quarter, we approved, in the second quarter that is, we received Health Canada approval on the first of 3 in-licensed urgent care products. And the preparations are underway for a launch late this year, so late in 2014 or early in 2015, early being the first quarter of the year. And we are awaiting Health Canada approval on the second urgent care product. Health Canada tells us per their scheduling that they expect that to be in the fourth quarter of this year. So that is a 2015 launch product. And in addition, in the quarter, we were named to the Profit 500 Canada's fastest growing companies. That was for the second year in a row. And our growth rate actually accelerated in the 5 years ending 2013, December 31st, 2013, our growth was 608%. That compares favorably to a 5-year growth rate in the previous year ending of 355%. So on the next slide, I just want to walk you through our pharma sales by quarter. And we're now really delighted to announce that we've got 19 consecutive quarters of growth in our pharmaceutical business. Pharma sales in Q2 of this year reached just under $2.9 million, a fairly sharp increase from Q1 of this year of $2.34 million. and that gives us now 19 consecutive quarters of growth. In the last 12 months, our compound quarterly growth rate has been 15%, so that's quarter over quarter sequential. And versus year ago, the second quarter of 14 was up 72% versus Q2 of 2013. This is a slide on our revenue mix that we've been detailing in prior presentations. Probably won't need to be showing the slide very much longer. Our legacy business is stable. Our pharma business is contributing more and more, which is in line with our strategy. In the 6 months ended June 30th, our legacy business represented about 5% of sales, and that's more or less in the range of what we expect the year-end result to be, although Q3 is historically a strong quarter for the legacy business, and based on what we've seen so far, July and August, that trend would continue. But for the end of the year, we expect overall the legacy business maybe in the 5-6% range of total sales for the company. On the next slide, I want to talk a little bit about our net income before tax for the quarter ended June 30th. You can see there the sharp climb over the last 4 years from 2011. In Q2 2014, our profit before tax and essentially our operating income reached a little over $1.2 million. That was a 125% increase versus Q2 2013, and is up over 10 times over the last 3 years from the base year of 2011. So our net income before tax for the 6-month period on the next slide reached just over $1.9 million, which was an 86% increase over a year ago. So you could see the second quarter was a particularly strong quarter on the year ago comparison. So at $1.9 million, up once again sharply from $1.02 million in 2013, and very high multiple increase versus 2011 in the 15-16 range versus the 2011 number of $115,000. So that's the income before tax story. Net income after tax on the next slide. I want to talk both first quarter and then the 6-month period. So net income for the quarter was $889,000 rounded. That represented an increase of 112% versus Q2 of 2013 at $418,000. And just one thing I'd like to point out, if you're going back past 2013 and looking at this, we were not expensing tax in the similar period in 2011 and 2012. So there's no tax expense in those 2 years. There is tax expense in 2013, and of course there is tax expense in Q2 of 2014, and the best comparable then is to look at Q2 versus Q2 of 14 versus Q2 of 13, and that 112% increase versus a year ago. On a 6-month basis, our net income after tax is up 84% versus 6 months of last year. So that's $1.4 million versus $763,000 in 2013. And once again, just draw your attention to no tax expense in the 2011 and 2012 6-month periods. So once again, sharp increase on a year ago comparison, and certainly in the second quarter of this year. On the next slide, we've got our balance sheet snapshot. You can see that we're doing a good job in converting increasing sales and increasing profitability into cash on the balance sheet. Our cash on June 30th was for a little over $4.8 million. Just remind you that we continue to be debt-free both on a long and short-term basis. We do have an operating line in place with the Royal Bank of Canada, which as at this date we have not used, and in fact never used, but it is there if and when we need it to help grow our business. Total equity has now reached a little over $6.3 million, and over time you'll see, and further reading, if you go into our MD&A, you'll see that the deficit of the company has decreased significantly, and we expect that to be gone by the end of the year. We continue to have a disciplined approach to managing our operating expenses. With the revenue increases we talk about, we've in total our operating expenses continue to lag our revenue increase, and we are investing in growing our products, growing our brands, and we are preparing for the launch of a new gastrointestinal product in Q4. And despite that, sales are increasing at a faster rate than our OPEX, which is just the way we like it. On the next slide, we've got an earnings per share calculation for you. Really, the key message here to take away is that our new trailing 12-month fully diluted EPS is 18 cents. That's on the back of 6 cents a share in the most recent quarter. That is a doubling of the EPS in the comparable 2013 Q2. It was 3 cents last year, 6 cents this year. And if you look back over the last 12 months, our EPS is 18 cents. Subsequent to the end of the quarter, FeraMAX Powder had a record month, another record month. So the trend has continued with that product. We also in-licensed a third urgent care product from the same European partner. I made reference to that earlier in the presentation. The Canadian dossier is being prepared for filing at Health Canada, and the product will be launched after Health Canada approves. At this stage, we're not prepared to say when we think that might happen. We want to get the file in with Health Canada and get in the queue there. On the next slide is a summary of products that we have and really how we define them and what stage they are, whether they're being in-licensed or going through regulatory, pre-launch, launch, growth, or maturity. At this stage, we have no products that we would define as mature. That is a product that is growing at a rate of less than 20% annualized. We have two growth stage products, FeraMAX 150 and Cathogel Jelly 2%, are both in the growth stage. We have two products in the launch stage, that is Repagyne and FeraMAX Powder. And then we've got two pre-launch products. So the one is the gastrointestinal product for Q4 2014 launch, and then the first urgent care product for Q4 or Q1 2015 launch. Right now, launch being prepared. We have started talking to healthcare professionals and hospitals about the urgent care products that are coming. These products all share the same technology platform. And so we've started discussions with customers and decision makers, and at this stage are getting some good feedback from the market. And then finally, we've got the second urgent care product that is in the Health Canada pending pipeline. And then, as I've just mentioned a moment ago on the last slide, we've got the third urgent care product in licensed and going through the process of preparation for filing. So by this time next year, certainly by the end of the second quarter of 2015, we expect 7 products in the market by the end of June next year. At this stage, I'd like to wrap up. I want to thank you very much for your interest in BioSyent, and we look forward to reporting to you over the next coming months and quarters our continued growth and development. If you are interested in getting some more information and going a little bit deeper, I encourage you to visit some resources that I've got on the last slide. Bioscience.com. FeraMAX CDAR is where all of our public filings and disclosures are. If you want to get a quick quote or a quick snapshot on financials, you can go to TMX Money or feramax.com, cathogel.ca, and repagyne.ca for product information. Once again, thank you very much, and we'll talk to you next time.